Okay, Bill Soriano from Pittsburgh here, and just quickly I wanted to show you how I scan through the market each day to determine if there's any scalping opportunities and how I have the chart set up to do that. So right now I'm on EURJPY, and I do use the 15-minute charts for the scalping technique that I'm going to show you. So on here, all you need to have installed is these 5 moving averages. And so the yellow moving average is the 5-day moving average. The red is the 13-day. The aqua line here is the 50. The white line is the 200. And the blue line is the 800. So those are the moving averages that I have installed. I primarily use the 50, 200, and 800 to determine if I should take a trade in a particular direction. So if you see what's lining up right here, how the 200 is below the 800, the 50 is below the 200, which way would you think I would look to trade or scalp this currency on the 15-minute chart? I would look to short it. I would not look, I would look to primarily short it, but I would first look for the move back and then to short it. And I'll explain what I mean there in a second once I show you one of the trades that I'm currently in. Okay, so and then I use the yellow 5-day and the red 13-day to determine when I should get into position based on the crossover of these two moving averages. And I like to name these like food. I'm a chef. I didn't think of this though, so don't give me credit for it. Somebody else thought of these names. We use the yellow, of course, is the mustard. The red's the ketchup. The aqua line is the water. The white is the mayonnaise. And the blue is the blueberry or blueberry pie, whatever you want to call it. So the other thing I have installed is an average daily range. So the average daily range, it is a 14-day average daily range. Okay, so if you look at the two indicators I have installed, I call the 14-day average daily range sniper. And then I have a custom indicator here, which is the 5 moving averages are on here. I can get you this indicator if you need it, but if not, you just add the 5 moving averages by going right to add indicator and selecting the moving average from the trend here, right here, and select the 5 moving averages. Now, what I wanted to show you here is that the average daily range, and this is a 14-day average daily range, okay? And when the average, so in this particular currency, the average daily range is 106 pips. So when you read this, it says 1064. The first 3 are the number of pips, okay? Today's range is 89. So the average daily range is 106. Today's range is 89. That means it's moved 89 pips in one direction or another from an extreme high or an extreme low point. Okay? So since the average daily range is 106, it's only moved 89. It hasn't met its average daily range. As a result, these lines right here, which is the average daily range indicator, are not red. Okay, so what I'm doing is I'm just scrolling through the charts. I have 15 or 16 currencies down here, and I'm just scrolling through to see if I have any average daily range lines that have turned red. Okay, now sometimes when you pull up a chart, the average daily range line, the lines don't show up. So you can do this. You can move here to get them to show up. But normally if they don't show up, that means that they haven't been met. So you can just keep scrolling at that point. You can also look up here again in the top, top left-hand corner. You can see that, the average daily range is 72 and it's only moved 44 today. So you know that average daily range hasn't been hit, right? and I just scroll through here to see if I have any opportunities. I don't see the lines, right? I can go like this to see them, right? Or I can just look over here and see 67.35, it isn't hit. You see, and I just scroll right through, and right here now we have what may be a trading opportunity. Right now it is 12:11 p.m. Eastern time. So if you know how I scalp, I don't take any trades. I take no new trades after 1 p.m. So right now there may be an opportunity to pick up some pips here with this currency. So as you can see here, the average daily range is 56 and it moved 58. So the lines are now red and it is broken down through to the downside. Okay. Now if we look at our moving averages, we see that they are lined up saying that this should move down, right? The 200 day is below the 800 and the 50 is below the 200. Okay. So what we look for here now is, and we look for this to continue downward, but we want to catch a few pips as it pulls back. And then we want to continue taking it downward the way it should go. So as you know here, since the average daily range has been met, right, we're going to look now, we have to wait to see if this 5-day moving average, the mustard, crosses the ketchup on the way up. And we'll get a confirmation on that by this green arrow. When it does that, when the candle closes, the 15-minute candle closes, we'll get a green arrow showing that it crossed. Just like you see right here. All these arrows here are showing that the 5-day has crossed the 13-day either up or down at the close of that candle. Now, we don't pay any attention to these arrows, right, these crosses, until the average daily range has been met. Now we want to look and we want to wait to see if this 5-day will cross the 13-day on the way up. The problem right now is it's already past 12 p.m. like I said, so we would only have till 1 p.m. in order to take this trade, because we can't take any new trades from 1 p.m. to 5 p.m. Eastern time because everything's going to reset. Okay, trading volume is going to diminish after 1 p.m. and then at 5 p.m. the new day starts and the average daily range values are going to reset. So this trade signal will no longer be valid. So more than likely, this isn't going to cross in the next 3 or 4 candles. So we're probably not going to be able to take a trade here. But had this happened earlier today, a few hours ago, we may have had a chance to take a trade there. So let's move on. We're going to keep scrolling through here. Okay. And as we see, there's no red line, so the average daily range has not been met. And now we see in AUDNZD that the average daily range was met. The average daily range was 51, and today it moved 65. What happened was here, as the day started here, it made a really big candle right here. This candle dropped all the way down to here. So when that happened, that set a low for the day. And so then when it moved up to here, right, it broke the average daily range. The average daily range was met because the average daily range is just 51. So the average daily range is a move in either direction from an extreme low or an extreme high that the currency has made. So it doesn't mean that it's moved 51 pips from where it opened today. It just means that it has made a move of 51 pips either up or down from a low or a high. So it breaks through the average daily range here. It moves up. Now, as you can see, we're in a trade here. But let me show you what happened here and what I did. So remember, when it breaks through on the way up, right, we're looking at the moving averages. They're lined up in an uptrend. So we know that it should continue moving up. but we expect it to pull back to the water first, right? That's our scalping strategy. So we want to wait for the mustard to cross the ketchup on the way down, and we get the error confirmation right here. Now remember, our stop loss is always 15 pips. So we have to be able to get 15 pips if we enter this trade on the next candle. If we make a move back to the water, we have to be able to get 15 pips. As you can see here, we only have 5 pips there back to the water. So I would not have taken that trade. We need to have at least a 1-to-1 risk-reward ratio, right, when we take a trade. So I would not have taken that trade, and I didn't. However, after it did come down and break through the 50-day, right, I did enter this trade. Okay, I entered the trade right here. I set my stop at 15 pips. I set my profit at the high, right above the high. So basically, I have just about a 15 pip. I have a 1-to-1 risk-reward ratio. I'm risking 15 pips to get 15 pips. As you see here, it made a move down, came close to getting me stopped out, but then it started to move up, back up above where I got in, and now it's kind of just resting here. Now, like I said, we don't take any new trades after 1 p.m. Eastern time, from 1 p.m. to 5. However, if we're in a trade, we let that trade run till we get our profit or we get stopped out of the loss. Okay, so that's the trade I'm in AUD and ZD. If we look at the last two I have here on the chart, we have nothing being met. So that's what the outlook looks like today here as we're finishing up our trades, since we're approaching the 1 p.m. Eastern mark here. And if I could just find where the other trading opportunity is, right here. Again, we need to wait for the 5-day to cross the 13-day on the way up to take this trade back to the water. Then once it hits the water, we would exit the trade with our profit, and then we would take it short in the direction we expect it to go, to down to the previous low, or 30 pips, whatever's better, whatever's greater, whatever comes first. And of course, we're always risking 15 pips. So we have to have a 1-to-1 risk-reward ratio. If we're going to risk those 15 pips, we have to be able to get at least 15 pips as our target. Okay, this is Bill Soriano from Pittsburgh. And until next time, let's make it a great day trading Forex.